Hello, everyone. I hope you guys are having a wonderful day, and I hope you guys had a wonderful Thanksgiving as well, and are enjoying the Black Friday shopping. For those of you who are shopping, for those of you who were trading today, again, today was a half session day today in the market. So again, today was absolutely, phenomenally light volume due to the short, trading day from 9:30 basically to 1. Only 29 million shares traded. So again, not surprising that today's price action looked like just basically sideways action throughout the entire day. Nothing happened. Sorry, this is a November 24 right here. So nothing happened. Just chopped for the entirety of the day. So really uneventful. Actually, probably the only eventful thing that happened today was probably NVIDIA coming down just a bit, like basically like almost 2%. But other than that, it was basically flat to positive. Essentially, the triple Qs came down for a little bit, but floated back up near the end of the day. IWM got a small bid. SPY got a flat, basically flat, and diamonds actually got a bit of a bid as well, coming up just a tad more. Now let's take a look at the or SPY count. So again, we are at extreme resistance now. We remain in an extreme overbought condition. And looking at the smaller time frames, looks like maybe they start to correct here. We'll look at the 45-minute. Looks like it's trying to bottom out. It could technically keep going higher. You have your July pivot right now, essentially basically 1% away from getting broken. And if that does break, if the July pivot gets taken out on the S&P 500, then I would start to. Oh, sorry, maybe it's not a 1%. Oh yeah, it's a 1% away. Sorry, it's right here. So if this pivot gets taken out, then the likelihood of this bullish scenario starting to play out is going to increase dramatically. But if we don't and we start to reverse, and there's a big news event and we start to pull back, and we aren't able to hold any of these supports, and it turns out into an impulsive wave like this one that I have drawn out right here, then we could have a significant amount of downside coming into markets. But again, very boring right now. Not much going on in the markets. It's kind of a wait and see period. We got a lot of big trades. I think the number one trade came in today on the SVIX, which is the short volatility index. Short volatility ETF. So essentially, when volatility goes down, this goes up. And today we got the number one ranked dark pool trade since inception that came in at the highs today. So usually when these massive trades come in at the highs, like we've seen here in the past before, here and here, and we're getting another one here, it's usually followed by a spike in the VIX, which could mean the markets are getting ready for a potential pullback very, very shortly. So again, your first signal of the market getting a pullback is going to be the VIX spiking up towards the upside. Okay, let's move on and we'll take a look at market cipher here. So nothing too interesting. It's actually showing a B wave retracement coming. We actually crossed into that green money flow for tiny bit of a couple of days. A very fractional amount of green money flow. The VWAP's been coming down. Now the red money flow starting to come back in. We'll have to see if we do get a pullback. I think we definitely will. We are very overdone towards the upside at the moment, and if even in a healthy bull market, let's say this is the healthy bull market, you need pullbacks along the way, right? You need to do some backing and filling essentially. So right now, the small caps. We'll take a look at the small caps. So again, the count for the small caps is essentially the same. Nothing has really changed. We'll just get in here, zoom in just a little bit. Today we made a bit of a nominal high. We took out this previous pivot, so maybe we've reached the minimal. At the very least, if the C wave doesn't extend, then you've reached the minimum of an ABC correction of a wave 2. And after that, you should be coming down in a wave 3, but the wave 2 can extend a little bit further because the C wave has just reached minimal, the very minimum of conditions for it to be considered a C wave. And then we'll have to see, when we open on Monday, if it starts to impulse down. If you start to impulse down, it could be the beginning of a wave 3. in a 1, 2, 3, 4, 5 pattern. Sorry, so a 5-wave move towards the downside. So again, just be patient, and we'll take it day by day. So again, IWM, taking a look at market cipher here. Nothing really new. It's actually still in the red money flow. So again, this is why I'm not really bullish on this entire rally. I know it's a very bullish rally, right? About some of the biggest rallies we get sometimes in the shortest periods of time are known as bear market rallies. And it's probably a really unpopular opinion right now, but we'll take it day by day, and we'll see what the charts show us next week. So again, it's not all doom and gloom. Again, the monthly looks terrible on the IWM, but the weekly is shaping up definitely like a lot better. The daily looks just okay right now. If it starts to consolidate at the highs without dropping, then that would be a bullish consolidation before your next move higher. But the 4-hour is actually looking quite good. You actually have a green dot today with some green money flows trying to come back in here. So maybe we'll see some money flow come back in, which would result in the IWM going higher. But again, the IWM is the leading indicator. Sorry, not leading indicator, but it kind of tends to lead the markets, right, when we go up or down. So we've seen a significant amount of accumulation here on the IWM. We'll have to see if this level holds. If it doesn't, all these funds that have accumulated here have either started to unload at the highs and we're not seeing it, or they are, either starting to accumulate for a longer period of time. Maybe they're accumulating on the way down, but I don't think that they would do that. But right now we saw a lot of buying. But again, this move was tremendous, right, on the IWM. This was a 10% move, right? We had that first 8% move in only 3 days, and now we're getting, to the 10, 11% levels, and we're starting to stall out. But we are consolidating at resistance, and we can break out. So don't discount it. And we can go higher. On the smaller time frames, nothing really happened today. We could see the SPY. We've been getting a significant amount of selling. On the 4-hour and the daily today, we actually got a red cross the other day. The 4-hour, we got some selling at the highs. So now that we are so far extended, you're starting to see the institutions finally starting to unload just a little bit at these levels here. Okay. All right, let me cover just a few more things. We'll take a look at NVDA. So NVDA, again, we got that nice little drop here. Could it be beginning its wave? It's wave one. It could be. It could be. It's definitely starting to impulse just a little bit here. We'll definitely know once we start to drop past this mean here at 472. If we drop below that, then yeah, the wave one could be in motion, which means we'll probably bounce back at 421, get a wave two retracement, and then come back down in a 3, 4, and a 5. After that, we can take a look at Apple. So Apple's a little bit more of a complex correction here, an ABC pattern into a WXY, finishing up the wave two, and now you should be coming down in a wave three. And again, the Apple, it seems very unlikely that it'll do that. But there's a lot of Elliott wave, people that were charting big pumps in the triple Qs, right? This entire move was mapped out by Elliott wave, and at the lows, it was disaster. It was bear time. It's time to short, right? So record amount of puts were open here on the SPY in the QQQ, and then we got this massive rallies, right? And now we got the record amount of calls being bought on the IWM at the highs here, and a lot of people are betting on just a straight shot up on the S&P, and I mean we're off to a great start if that's the case. But if we fail and we start to reverse down, then that's going to be all those calls are going to expire worthless, and those banks are going to make millions, maybe billions on those options expiring, right? Let's take a look here at let's keep going at these big names. We'll take a look at PayPal. So again, PayPal had a bit of a down day today, even with that even with the light volume day. But again, it's not that heavy of a traded stock like compared to the mega caps. But overall, if PayPal could technically still come back up here and continue this wave 5 and maybe extend to wave 4, right? So the wave 5 could technically keep going, but I'd have to redraw the count. And to my liking, I wouldn't like to force that too much. To be honest, it could be already finished, and we may not get to the 61 level after all, right? If anything, you might come back up in an ABC, right? Something like this, and then come back down in a wave 3. But it doesn't have to play out that way. Maybe the wave 2 is already done, but we'll take it day by day. Right now, there's not much action in the market, so it's kind of hard to dictate these individual charts as well. Nothing's really moving, to be honest. But we need to see more movement, more volatility, and then we'll really know the path of where these stocks want to go. Let's take a look at a ROKU. So ROKU here again consolidating at the highs. If it takes out its pivot here at 96, then we will have to factor in that the wave 5 is still in play and it's going to extend just a little bit further before it's finished. But right now, this seems to be the top, and we could be getting a little bit of a retrace as well. And again, we'll follow it day by day. We'll take a look here at natural gas. So natural gas is getting pounded here, but you just came back down to my buy zone that we didn't tag before. We tagged it today, and we hit this upsloping trend line. So again, to me, this looks like a bounce. Obviously, if you're trading a UNG or any leveraged products, right now it's definitely it's a tough trade because there's more decay in the UNG, right? The UNG looks like you're getting a double bottom. Nat gas futures, it's making higher lows, right? So there's that much decay on these ETFs. So you need to be careful when you're trading them. But overall, it's at a significant amount of support as well, and you should see more upside, right? I'm very bullish on natural gas. Wheat today got hammered as well. So again, our wheat play coming back in just a little bit. And again, this is a monthly chart pattern, but we'll take it nice and slow. Overall, I like what it's doing, and I think we have a lot more upside coming in January. And let me just cover here the dollar. So the dollar again got hammered today as well, down 32 basis points. We'll have to see if the dollar can firm up. If it can, then you might get a significant amount of upside in it, as it is in oversold condition. Taking a look at the DXY, you did print a nice little green dot the other day. You didn't really see anything come up from it though. And I mean, right now it's showing that we should make one more high on the Elliott wave indicator, but we have an increasing amount of red money flow. So that's actually very bearish for the dollar. So the dollar can keep going lower. Looking at the yields had a nice pop today, but again, even with the yield, so when you look at the current market environment that we're in, you see when yields go down, it's bullish, right? And when yields are flat, it's bullish, right? But when yields go up, it doesn't matter. It's still bullish. So again, regardless, we're in the market sentiment is extremely bullish. So trying to get in front of the markets right now is a very difficult trade. It's a very difficult trade. It's not easy because you're just going to keep getting blown up, and it's just going to keep pushing higher until it doesn't, right? But when you get that reversal, you're going to get all these people that FOMO'd in, that bought in at the highs. They're all going to start, getting a little bit worried once we pull back, but they're going to say, oh, it's just a healthy pullback. You need a pullback. But if it can get out of hand and it starts to lose its levels, then they're going to really start to panic. And that's when you can get a very big sell-off. Because right now, a lot of people are loading up on calls, buying, at the highs here, expecting a huge breakout like we got here from this downsloping trend line, right? We got, we're just hammering it. Finally, we popped and we came back down. And then we kept going after that. I think it was this one right here, right there. I think that's the one right there. And then we popped up and we just started going up and up and up. Anyways, overall, I think the markets are really overbought right now. You guys kind of get where I'm coming from. I've been following this for quite a bit of time, and it's a very light volume week. It's a Black Friday shopping week, so everyone's out shopping. Stock market, corrections or crashes probably won't happen during these periods of times. They will happen after the shopping spree is done, because if the markets crash before the Black Friday event, then no one's gonna everyone's gonna be panicking. No one's gonna be shopping, right? Everyone's gonna be worried over the weekend. They're gonna be spending less, and again, that's bad for the economy. They want people spending. That's the way. That's the name of the game. Anyways, hopefully you guys have a wonderful weekend. Enjoy your Black Friday. Keep shopping, spending that money that you have or maybe don't have, and then I'll see you guys on Monday. Have a good weekend.